Welcome to etvFutures.com. It's Monday, December 10th. I'm Remy Hokie for Commodities Recap. NYMEX crude oil futures is traded lower in a volatile session. After hitting an intraday high of $89.75 a barrel, NYMEX crude futures ended down by 42 cents at $87.86 a barrel. Futures price gains seen earlier that that an economic slowdown will result in lowered energy demand. Warmer weather is forecast in the U.S. Temperature above average temperatures are expected to reduce demand for heating fuels. In today's session, NYMEX January heating oil lost 2.73 cents to settle at $2.74 a gallon, and January gas ended down 9 cents at $2.2501 a gallon. And elsewhere on the NYMEX, January nat gas futures fell 12.3 cents, closing at $7.032 per million BTU. In metals, gold futures rallied in today's session, ending above $810 an ounce. The precious metal saw support ahead of Tuesday's Fed rate decision, as well as on U.S. dollar weakness. February gold rose $13.30, ending the session at $813.50 an ounce. Meanwhile, March silver futures rallied today, ending up by 34.5 cents at $14.85 an ounce. Now we're joined by James Mound from James Mound Trading Group and author of the Mound Report. He'll give us his commodities outlook for the week ahead.
This is James Mound for MoundReport.com with the week ahead for the week of December 10th. This is really the last credible week of extreme market volatility that we can expect before the new year. Holiday volume starts coming into play the week following this one, and we'll look for some reduced volatility and intraday volume in the markets. But this week kind of stands alone as a week in which we could see some volatility expansion, not only because we're pre-holiday, but also because we have some critical fundamental reports coming out this week. Starting on Tuesday, we have the World Ag Supply and Demand Report, as well as the Fed meeting, the Cotton Ginnings Report. Wednesday, we have a key energy report following a 8 million barrel draw in crude oil last week. And then we have retail sales, which is the most important retail sales report of the year because it reflects November's Black Friday retail sales. And it's a good indicator for the economic outlook for the year as well as consumer spending. And on Friday, we have CPI report. So this is looking to be an extreme week. Position yourself with financial positions in the euro, grains, which are seeing a nice bid ahead of the World Ag Supply and Demand Report, but also because we're seeing some weather issues. In South America, we're getting a drought, which is causing some major rallies out of soybeans and corn, mainly due to the fact that we just finished the majority of the plantings for that time of year. And wheat is catching a strong bid because of some weather issues in Canada. We're seeing lack of rain in certain areas, and too much rain in other areas is causing some serious problems there. So we're seeing a strong rally out of the wheat market. Overall, the grains really look like we're going to see a December rally. Looking at the Fed meeting, a lot of people are forecasting up to a half a basis point cut by the Fed. I think psychologically the Fed wants to create some sense of order to what they're doing. You'll see a quarter basis point cut, but it's certainly not only difficult to forecast, but in addition to that, the Fed statement looking forward and looking ahead to future interest rate cuts is really where the market focus is going to be. Stock market's built in a rally on anything type of psychology the past 2 weeks. I expect this to be a bit of a contrarian move in the stock market and a sell-off to occur following tomorrow's meeting and report. Looking at the currency sector, take a look at shorting the euro, using some 144 Jan puts in the euro currency. To me, that's the best way to approach the market. There's really a low underlying premium in that option and potential for expansion of volatility premium in the euro currency if we do start seeing a severe correction following tomorrow's meeting. Outside of that, take a look at the cocoa market, breaking fresh highs today on some strong rally potential in that market due to Ivory Coast issues, mainly farmers striking due to poor pay. Overall, this is a market that has a lot of bullish fundamentals behind it, and we should see continued upside, and I'd recommend buying some call options in that market. That'll do it for me, James Mound, MoundReport.com. In the week ahead, we'll be off next week and the following week due to holidays, so have a happy holiday and a terrific new year. We'll see you next year. Bye-bye.
That was James Mound from James Mound Trading Group with his commodities outlook for the week ahead. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on etvFutures.com.